We're talking to Meeka Metals Chief Executive Officer Tim Davidson. Meeka Metals is a minerals explorer in Australia. Tim, can you tell the audience about Meeka Metals?
Absolutely, John. We are a Western Australian-based company. We have a portfolio of gold assets and importantly a 1.1 million ounce gold mineral resource in the Murchison. Some really exciting gold discoveries both in the Murchison and a project in the Albany-Fraser province at Circle Valley. In addition to that, we've got a really exciting opportunity in the rare earth space, and we can talk a little bit more about that today.
How does the company stand out from its competitors?
The key is we've got a fantastic team, and that team is focused and very driven, and we're aggressively looking to create shareholder value through both discovery and development of our assets, and we're having great success progressing on those fronts.
Can you tell the audience what metals Meeka is looking for?
Principally, it's been gold, and we've had great success with that. We've got a 1.1 million ounce gold mineral resource in the Murchison, and that's growing rapidly. We've got some fantastic drill results coming from outside of that resource. And complementary to that, our gold at Circle Valley in the Albany-Fraser region. So gold has really been the backbone of the business up until early this year, and we're still very much focused on that. But through that work we did looking for gold, we made a significant, or what we believe is a significant discovery, and that is the presence of these high-grade clay-type rare earths. And we've since built a portfolio, very large land holding around that rare earth opportunity, and again in southern WA.
Where do you see gold markets heading in the current macro environment?
Yeah, I think the overlay or the big macro thematic there is inflation, and that's been really elevated. If you look at household savings, households are in a really strong position. Wage rises are starting to materialise, and that's, wages have been stagnant for quite an extended period of time for the last decade. Interest rates in the historical context are very low, and all of those things are, and interest rates low in relation to inflation as well, which is another really important point. So look, all of those things point to inflation being sticky and hanging around for an extended period of time, and that's certainly what not only ourselves but other commentators are predicting. Now, that's a fantastic environment for gold, and if you look at where gold is now in US dollar terms, we're looking at sort of $1,700 to $1,800 an ounce, and it's sort of range bound. But in Aussie dollar terms, we're in at or near all-time highs. We're sitting at around 2,500 Aussie dollars per ounce, which is it's a fantastic gold price for gold producers in Australia, and margins are very strong for gold producers in Australia at the moment. So look, we see that being a perfect setup for a fantastically strong and increasing gold price over the next few years.
And looking at rare earths, where do you see the rare earths market going?
To shape that discussion, you need to look at what drives the rare earth market, and that's principally, or the rare earth market is principally driven by demand for permanent magnets, and the demand for permanent magnets is really driven by the uptake in electric vehicles and renewable energy generation, and specifically with respect to that wind power generation. So then if you step into that a little bit further and break that down, from an electric vehicle perspective, electric vehicles or the use of electric vehicles are forecast to grow at about 20% per annum over the next 4 years, and that's then going to drop down to about 10%, but that's still a significant growth rate. And by about 2040, you're going to see more electric vehicles on the road, passenger vehicles on the road than diesel and petrol cars. Now, every electric vehicle uses about 2 to 5 kilograms of rare earth permanent or rare earth magnets, and each rare earth magnet has about 30% of that weight in rare earth metals. And if you look at then step into the wind turbine generation, that's forecast to grow at about 25% per annum out to 2030, and I don't think anyone sees that slowing down after 2030. Each wind turbine uses about 650 kilograms of permanent magnets, and again, about 30% of that's rare earth magnet metals. So, growing demand in the rare earth space is really going to be driven by growing demand for permanent magnets and permanent magnet metals. And if you look at what goes into permanent magnets, well, it's really 4 of those 15 rare earth elements. So neodymium, praseodymium, dysprosium, and terbium. So, and if you look at those magnet elements, they account for about 20% of the market volume, but about 95% of the market value. By 2030, that's going to account for about 30% of the volume and 99% of the market value. So really the whole market is driven by those 4 magnet elements. And now, so that's, if you look at that sets out the demand side and the drivers behind that demand. If you look at the supply side, everyone we speak to and people that are intimately involved in that space tell us that there's going to be a significant supply deficit over the next decade, and that's going to be somewhere between 15 and 40%, depending on the number of new projects that come online.
What's on the cards for Meeka Metals moving forward? As
I mentioned before, we've got a fantastic portfolio of projects, both gold and rare earth, and what that does is it gives us the opportunity to do a lot of things, both advance the gold opportunity, and that is right now growing the resource, and we're working on studies to put that Murchison project back into production. We see a really great opportunity to generate cash flow from that gold asset. It's looking really good, and so it's both working towards production but also growing the resource in the Murchison. We've got a fantastic gold asset at Circle Valley, and we're drilling that. We're about to start drilling this week, some diamond drilling. So that's looking really good as well. That doesn't have a resource around it, but it's certainly exciting us. And down there as well in southern WA is the rare earths, and again that's looking like a really valuable opportunity and something that will play an increasingly important part in our portfolio over the next few years. And we're doing MEK work on that, as well as we've still got a significant number of drill results to release. And I think that, as I said, that'll be a really key part of our project portfolio over the next few years, the rare earths opportunity.
Looking at future outlook, where do you see Meeka Metals in 1 year's time?
I think we're going to be significantly more advanced in the rare earth space. We're working towards drilling out a resource, so infill drilling for rare earths at Circle Valley, and certainly doing some more drilling at our larger and what appears to be much higher grade rare earth opportunity at Cascade.
All right, and Tim, for the last question today, I'm going to pass you the crystal ball. Where do you see Meeka Metals in 5 years' time?
Ideally, I'd love to say we'll be in production. The gold's looking really, really good, and we've set out our plans to develop the gold asset in the Murchison, and ideally, be in cash flow within 5 years, and certainly a lot sooner than that. And look, with the rare earths, it's a really exciting opportunity. As I said earlier, we think that rare earth space, prices going much higher, demand's going to outstrip supply. It's the perfect tailwind for developing a rare earth project, and look, we're going to progress those assets as rapidly as we can.
Meeka Metals Chief Executive Officer Tim Davidson, thanks for your time.
Thanks, John.